So this video isn't going to be that of a optimistic one, but the way Canadian housing is going right now, I really only see three different scenarios playing out. So we're going to go over all three, and at the end of this video, I'm going to tell you guys what I think is the most likely scenario that's going to happen going forward into the future with Canadian real estate. With rental rates increasing 1.5% in September, day of recording is actually Halloween 2023, and 11% year-over-year growth for the rental market, and interest rates now at 6.5% or higher. No matter what way you look at housing, it is largely unaffordable for the masses right now. So in 2020, before the world got completely messed up, the average price of a home in Canada was $567,000, and today it's $662,000. So as a rule of thumb, for every 1% fluctuation in interest rates, we should see home prices fluctuate 10% up or down depending on what interest rates do to compensate for the loss of affordability or the gain of affordability, right? So if interest rates go up 10%, real estate becomes 10% less affordable. Prices should come down to, keep the status quo, the same amount of affordability as we had before the interest rates go up, and vice versa. If interest rates, go down 1%, well, then home values should theoretically go up 10% because it just became 10% more affordable. Well, with the overnight lending rate sitting around 1% in 2020, we saw interest rates basically went down for the entirety of that year, but they started at about 1.5%. So the average for the year is probably around 1%. And, today we are 4.25% higher. So in theory, if prices stayed the exact same as they did in 2020, we would be, 42.5% more unaffordable. However, because prices are actually higher as well, about 15% higher, we are 57.5% more unaffordable than we were pre-pandemic. Now, what happens in a scenario where unaffordability worsens, interest rates go up, but prices don't come down, which is exactly what's happening right now, is you start to see rents skyrocket, and rents skyrocket for a multitude of reasons that I'm going to discuss right now. So number one, because the yields are so terrible in real estate, investors stop investing in real estate. It's not profitable or affordable to buy real estate as an investment and rent it out. And the result of that is that if demand stays the same, you have less supply coming to market because there's less people buying, investment units, renting them out. The supply goes down. Well, then the prices have to go up. Number two, you have more investors liquidating their rental units because their mortgage has gone up 30-40%. Now they're losing money on it. They can't afford to hold it. They can't afford to subsidize that investment. And likely in 8 out of 10 cases, these units are going to be purchased by end users, especially in Vancouver or Toronto where rent control exists, because likely you have a tenant paying far below market rates, and any investor isn't going to buy a currently occupied tenant that is paying far below market rates. They're just going to buy a vacant unit or a unit that is owner occupied. That way they can put their own tenant in there at current market rates. Again, the result of this is less rental supply. You have investors selling their rental units, and then they're getting taken off the market by people who actually want to live in those units. And number three, people who would have bought real estate to actually live in it, that are, maybe living at their parents' house right now or whatever the case may be, now that it has gotten so much more unaffordable, they simply can't afford to do that. Therefore, they enter the rental pool, thus increasing the demand in an environment where the supply is already decreasing. Prices up. Number four, you have much less new construction going on right now. I believe it's at almost all-time lows as we speak. And this doesn't have an immediate effect, but we will start seeing the effect of this in about a year. So in a year when all of those homes that under normal circumstances would have been built, but they're not because builders aren't building because it's just not profitable to build, that will be a bunch of rental units that don't exist that should exist. And lastly, we have people that just can't afford their homes anymore. Their mortgage has increased 40-50%. Some of those people might move to Alberta. Some of those people might move to Saskatchewan, but there is going to be a certain populace of those people who just sell their home, take their 150 grand, 200 grand of equity, and then they rent something where their monthly expenses are $1,500 to $2,000 a month cheaper. So this is now a home owner that is entering the rental pool. Again, adding to the demand side of the equation. So you guys can see in an environment like this, we have a lot less people offering rental supply and a lot more people needing that rental supply. So this has put extreme pressure on rents as of late. And there's a few other things that will affect rental prices in the next, whatever, 5 years, but these are the main ones. So what are the 3 scenarios that I see playing out over the future here for Canadian real estate, and what is most likely? Now, my personal opinion for Canadian real estate, I know there's a lot of people out there that think we can fix this problem. I personally don't think we can. I think the damage is done. I think all we can do is make it better at this point. I think we are beyond fixing it. And I know that sounds negative. You know, you can call me a pessimistic. I call myself a realist. Because in all 3 of these scenarios, I think something that's going to remain to be a constant is we are just not building enough homes. Even pre-pandemic, even for the last 30 years, we have never been building enough homes. And I know right now we have record high immigration, so that's just, you know, amplifying the problems that we've already had. Maybe in the next couple years, we won't have, you know, record high immigration, but we'll probably still not be building enough homes. So scenario number 1 is home prices drop a large percentage. Investors re-enter the market. This slows the growth rates of rents and at least stabilizes the rental market for a little bit. However, in this scenario, if home prices fell by a large percentage, you could expect that it would be followed up by interest rate cuts. And then we'd have a scenario where home values are lower and interest rates are lower, giving us a window of opportunity for people to get into the market, investors to enter the market, so on and so forth. But the result of that would likely be prices getting bid back up very quickly. And thus, real estate, even with a large percentage drop, would likely become unaffordable once again in the years to follow. And there would probably only be a short window where, you know, more and more people could actually afford to get into the market. The second scenario, now I think this is the most ideal scenario for everyone, is we just go through a period of like 10 years where real estate prices don't really go up. Maybe they're flat, maybe they go down 2% one year, maybe they go up 2% or 1% one year, but wages actually grow at 3%, closing the gap of, you know, how do I do this? I don't know how to do this. Closing the gap of affordability, right? Because if wages keep going up while prices are, you know, not, eventually that's going to become more affordable for the masses. However, I do think this is the most unlikely scenario. It'd be nice though. And the third scenario, now I personally think this is the most likely scenario of the 3. And that scenario is that home prices do come down, but they don't come down anywhere close to closing that 57.5% unaffordability gap that exists right now. Or they don't come down at all, or they go up slightly over the next year. Either way, what prices do don't really matter in the big scheme of things. All that matters is that they're not coming down anywhere close to what is deemed to be affordable for most people. In a few years, we will feel the repercussions of record low housing starts with record high immigration. People per household will likely increase, going from currently 2.2, maybe upwards of 3. And this will allow the price of rent to continue to increase because you'll have more incomes servicing the one rent payment. Money will continue to flow to the top 1% via assets and businesses. And eventually, years down the road, the bulk of the housing stock will be owned by the top 1%, and the bulk of the nation will be renters, and it will be a very difficult predicament to get yourself out of because your monthly rental payment will be so much of your income that it'll be very difficult to save enough money to actually get you out of that predicament. Now, I'm definitely not coming on here to spread fear, uncertainty, and doubt. This is just actually what I think is the most likely scenario, and that is scenario number 3. And listen, I will gladly be wrong about this, and in fact, I hope I am wrong about this. But I think the best case scenario here is, you know, obviously scenario 2 would be nice, but I don't think that's a realistic best case scenario because wages have never kept pace with anything ever, so why would they start now, right? But I think scenario number 1 is probably our best case scenario, where we see a massive drop in real estate values, but likely once that happens, there will be a short window for people to get into the market, and then prices will quickly be bid back up again, and real estate will once again be unaffordable for the masses going on into the future. So I don't mean to be super negative and act like, you know, you should just give up now, just give up and rent forever and whatever. In fact, I really hope that you take this video and do the other, you know, side of that, the other side of the coin, and start preparing for that possible scenario because somebody once said only the paranoid survive. So despite the negative overtone, if you did enjoy this, subscribe, like the video. I'm that Agent Kelly. I'm making moves to move you. Peace.